Okay, everybody, here we go. It's me again, Greg Mannarino, and I'm just laughing. Why am I laughing? You probably know why I'm laughing, some of you, but maybe you don't. Let's do this. So today just happens to be Tuesday, May 16th, 2023. So we got this retail sales number today. Now I want you to just bear with me here for a second here. So we got this retail sales number that came in better than expected. Better. Understand, the U.S. economy is a retail sales based economy. 70% of the economy is dependent on consumers getting out there and spending. What have we been hearing over the past couple of weeks? Consumers are maxed out. They can't borrow anymore. They're cutting back on spending. All this stuff. That's true. Okay, no doubt. And we got some more proof of that I'm going to cover in just a moment. So again, for April, they float out this retail sales number and it's, wow, oh, how did that happen? It's great and fantastic. But anyway, here's the truth that lies behind that. There are certain companies that are bellwethers for retail sales and for the economy. One of these happens to be Home Depot. Home Depot just had its biggest revenue miss in 2 freaking decades here. Why? Because consumers are pulling back. Look, they're going to try to fist feed you garbage, nonsense, fake data, and you already know this. All right, this was like one of the things I said would happen from last year moving into this year. Fake data, fake news, look here, don't look there, deceptions, distractions, and this is a big part of it. Again, they must convince you that everything is just fine. Again, why? This is the Joe Biden-Stein mummy man, a re-election campaign. We can't get any real news anymore, any real data from the mainstream. I mean, you want to know what's going on? Focus on this kind of stuff. It's just insane how they try to pull this stuff off, but that's what they do. What else would you expect here? So it's an amazing thing, but that's just the way it is. Now, I forgot to mention this yesterday, and I should have mentioned it. So all day they were floating out this thing. You know what this is? This is Janet Yellen. This is what she looks like. Every time I see her, she looks like this to me. With her, whatever it is, that hairdo, it's a horrible thing to even look at. But all day she was floated out on network after network after network talking about the dangers here. The danger. We must raise that debt ceiling. We must promise to continue to borrow. Look, we're broke. The United States, what are we, $35 trillion in debt? Well, we were broke $35 trillion ago, and we continue to get even more broke today. But we must promise to borrow more. Why? Why do we have to promise? Let's think about this for a moment. I know you know the answer, but let's start off the day nicely. You know what I'm saying? Why do we have to promise to borrow more? Because it will keep the Federal Reserve in power. And that's really what all this worry is here from people like Janet Yellen, from Powell, vomitous mess here. Again, we could kill the Fed. We have an opportunity here to kill the Fed. And subsequently, it would start a domino effect around the world. Every other central bank would also fall. If we don't borrow, if we don't have a central bank print $1 extra, just one of debt out of thin air, well, guess what? We win. That's the truth. It would cause economic pain as we transition out of the debt-based economic model. You see, here's the deal. Our politicians, they're in the back pocket of, obviously, the Federal Reserve. We have no representation anymore. If we had just one politician here that would explain this to people. I mean, President Trump, let's give a little credit where credit is due here. Okay. He said that we should force a default here, but he doesn't believe it would happen. Okay. If we had a default and it actually went on and we didn't raise the debt ceiling, period, the end, we could take back our nation, we could take back the world, we could implement a new wealth-based system, but it will not happen. This is how I see this playing out. Again, I believe there's a high probability that we will default here, at least for a short period of time, probably like a 65% that it's going to happen. I know that they're having the Confederacy of Dunces, they're meeting today, and they're going to talk about raising that debt ceiling. It's going to be beautiful and lovely and fantastic. But if we were to default, it wouldn't last more than a couple of days, in my opinion. They would come up with another reason to borrow more. I mean, that's what this whole mechanism is about. This is why nations around the world, including the United States, is funding this never-ending war over there. It's not going to stop. Okay, you and I knew from day one they were going to prolong this. It was going to go on and on and on. It's just a mechanism to continue to borrow cash, pull it into the now. Period. The end. I think we all know that here. Now, with regard to inflation, okay, what did we find out just yesterday? My Eurozone friends, unfortunately, we're all in trouble here. But it seems to be rearing its ugly head a little more over there right now. What is the number one product of the what does the United States export to the world? Number one product? Debt. Inflation. That's what we do. Again, because of the debt-based economic model, the Federal Reserve, the U.S. dollar being the world reserve currency, by far, and look this up for yourself, more transactions around the world are done in U.S. dollars than any other currency. Excuse me. That's a fact. All right, but you know all this already. So let's throw an eyeball over here at the market. So this morning we got stock futures lower. Okay, nothing dramatic, but lower nonetheless. Trading doesn't start for 46 minutes from the time I am doing this video blog. Okay, so 46 minutes, a lot of things can change. Who knows? Maybe something else will happen and the stock futures will go higher, but right now they are lower here. The 10-year yield came up. Okay, there's a little bit more risk here in the market. Relative strength of the dollar is actually a little weaker this morning. No real fear trade going on here. You got cryptocurrencies under pressure, Bitcoin under pressure. You got gold and especially silver under pressure this morning. Imagine my shock here. Crude oil isn't doing too much either here, but there's a lot of talk, not just from me, okay? You flip through the channels on the mainstream and there's a lot of people kind of, trying to explain that this route that we've had in energy, crude oil coming down as of late, it's not going to last. In my view, it is not going to last here. But again, with commodities, people, I really, people ask me all the time, Greg, what about commodities? What about commodities? What about commodity ETFs? All this stuff like that. And I talk about it to the point of nauseum in my view, but it seems that people want to know more about it, and that's fine. Okay, commodities, things like gold and silver, gold, silver, platinum, palladium, crude oil, all this stuff here, okay, it's going to remain kind of more or less range bound for a while. Okay, the commodity super cycle, which I've said, and other people are using the same words as well, is going to occur when the debt market melts down. Debt market meltdown, cash bleeds out of there, crushes stocks, cash just moves into commodities. It's a very simple concept. Remember, it doesn't grow little money wings and fly away to money heaven. No, it just moves. It moves from one reality into another. So you and I, by betting against the debt, becoming our own central bank, are putting ourselves in the right spot for what's coming down the pike. You understand? I can't imagine someone wants to stay in the dollar at this particular time here. It's a dying asset. Fiat currencies all of them are dying assets. Yes, the U.S. dollar remains the prettiest belle at the ball. But you knew this as well. I mean, on a relative strength basis, I talk about this all the time. The dollar is lovely. It looks beautiful on paper. But with regard to purchasing power, again, think about this. Think about this, and you know it already, I'm pretty sure. Since 1913, the inception of the Federal Reserve here, the U.S. dollar has lost 98% of its value or its purchasing power. And they want that last 2%, and they're going to get it. How are they doing it? Dismantling the system, piece by piece by piece. Okay, this banking issue here. Oh, did you hear the CEO of the ex-CEO of Silicon Valley Bank? he blamed the Federal Reserve for what's going on here. And duh, we knew it was the Federal Reserve. The banking regulators, oh, they just missed it. But Joe Biden wants you to trust, he wants you to trust the regulators because they're so trustworthy. They definitely got their jobs done. It's amazing. We found out that the regulators knew about what the issues with the whole regional banking system, as a matter of fact, from last year, October, and then November, the Fed became aware of it. They did nothing. They did nothing. They allowed it to happen, and you know all this. Anyway, we're not going to cover that. Anyway, that's where we stand here, people. As I said, stock futures lower, retail sales there. It's fantastic. It's great, okay, because that's what they're telling you. It's not true. Okay, and the bellwether here, Home Depot, in my view, is a bellwether. Look it up for yourself, okay? The fact that they just had the biggest revenue miss in 20 freaking years should tell you something, all right? It's not what they're telling you. You see, don't believe your own eyeballs. Don't believe them. It's what they're telling you that's real. You know it because, well, they're all authority figures, right? And the data they're giving you could not possibly be misleading, could it? No. Of course it is, people. I think we got that down. This guy here from the heart, I mean, I love all of you so much. It's the truth here. We're a big family. We're a big team. Please share this video. Comment on what I've spoken about here. Those thumbs up are so valuable. Just take a nanosecond. Click that thumbs up. Let's people hear this stuff, all right? People, I will see all of you later for my live stream, 1:05 p.m. Pacific time. Looking forward to it. I really am. Have some questions ready for me. We'll cover whatever you want. And that's it. I'll see you later.